Hello and welcome to another update video about Ethereum. So the question is, can Ethereum hold above $2,039? This is the support level we talked about in yesterday's video as clear level pivot that helps us distinguish between bullish and bearish momentum. The correction is clearly not completed yet. The last rally that unfolded from the recent low here and which formed on Saturday, that was a three-wave move, right? I mentioned it yesterday in the updates on Discord that this to me looks only like 3 waves up, one more high needed for 5 waves, but the market failed to do so. So still, you know, not any confirmed low in place. It would take minimally a break above this high anyway, 2,256. Better a break above that high in 5 waves for an indication a low is in place. Better indication even here, a move above this Thursday high at $2,320. But overall, we talked about all of that, and the situation hasn't changed. We're still caught in a correction. Yeah, movements to the upside look corrective, and the white count really turns into hopium at this point. So it's kind of low probability, or at least probabilities are balanced. But what I can tell you is that the white count still allows for the interpretation that a substantial low has formed here on the 4th of March. I'm not convinced. And therefore, I told you I need to see a break minimally above one of these swing highs. And as long as we still print lower lows and lower highs, especially here lower highs, still printing lower highs, there is no evidence at all that a low is in place. And so, I mean, we can track this Fibonacci support area. There has been a reaction to it twice. So we'll see if it reacts again. So this is why I'm tracking still the white count as a potential. But it's very, very... yeah, I mean, it's yeah, what should I say? It's a bit of hopium there, because first of all, we have a potential wave 1 up from a significant low, from a potentially significant low, but then it's very protracted, and the price already had a chance to break out here on Friday, had a chance to break out here on Saturday, and my experience tells me when a price fails to do that a few times, then it typically won't do it. Now that's just let's say tracking the structure and talking from experience. Of course it could, that's why we have the levels that keep us objective. We've got Fibonacci support, which we can watch at 2,130, 2,103, 2,076, and 2,038 as relevant micro levels to watch here for a wave 2, but it's a very protracted correction. Very protracted, and whenever it gets so messy and extended, I would say it typically doesn't hold, but we can still watch these levels for a reaction, and should the market now turn around, break above 2,256, that's something to watch for a reversal signal to the upside. But from a bearish point of view, short-term bearish at least, we could be working here now on this C wave to the downside. A, B, C. Let me change the wave degree here. And this C wave, we have a micro count on there as well. Wave 1, wave 2, and we could be working on the third wave, A, B, and we're now working on the C wave of the third wave. This is not clearly impulsive to the downside. So I'm tracking here a diagonal, which again leaves probabilities overall fairly balanced. So what I don't have in any way, in any direction, is a clear impulse from any low or from any high, right? So just to explain, this move down from the Friday high is a 3-wave move down. But this move up is a 3-wave move up. This here also doesn't clearly look like a 5-wave move down, rather like a WXY structure. The move up can be classed as 5 waves, but only this, and then you really can only see that as some kind of a weird wave 2 with an overshooting B wave. So what I can share here, we don't have a confirmed low in place, but also the move down, it's not likely going to drop like a stone, which is what I said to you a few days ago. So it's chopping around because the declines are not impulsive. From that point of view, we just have to have some patience, watch the key levels. 2038 is next key support. Below that level, and it might just, go for some fishing of stops below this Tuesday low, which formed at 1988. Roughly in 1990. But technically speaking, the next main Fibonacci level to watch is here at 1817. That could potentially act as support. Yeah, that's the update about Ethereum. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, please check out the membership. Also, if you're interested in additional content, register for our newsletter. It will come out shortly. You'll find a link in the comment section and the description. Thank you very much. Bye-bye.